From UFOs to psychic powers and government conspiracies, history is riddled with unexplained events. You can turn back now or learn the stuff they don't want you to know. A production of iHeartRadio.
Hello, welcome back to the show. My name is Matt.
My name is Noel.
They called me Ben. We're joined as always with our super producer, Paul, Mission Control Tech, and most importantly, you are you. You are here. That makes this the stuff they don't want you to know. Skirt. Today's episode is about something a lot of people might find boring. It's a peculiar type of product. It's something you buy out of necessity instead of for funsies. It's something that mainly just adults get. It's something everyone worries about. And the weird thing is, it's one of the only things that the more you use it, every single time you use this thing that you paid for, it gets more expensive.
Hold on, I know this one. It's from Lord of the Rings. This is a Gollum riddle. It's the wind. It's time. Wait, it's a timeshare.
Silence.
It's stone.
It's Willie Nelson's On the Road Again. It's you nailed it, Noel. Sort of. It's like a ridiculous situation because it does feel like a riddle, doesn't it? Like, how the hell could this one thing have all these attributes we described? Who wants to do it? For anybody who hasn't read the title, what are we talking about?
Insurance. But specifically, insurance for your stuff, your house.
Mm-hmm. Your house and all the stuff contained within it.
Mm-hmm. Mm-hmm. Yeah.
And around it. You know,
and
outbuildings, whatever, all that stuff.
Anyone that happens to come onto your property, right?
Yes. Now, in most cases, that is true. But I mean, think about how weird that is. Like, these are cold open. I don't want to go too long, but if you went to a shoe store, you bought a pair of shoes, you wore out the shoes over time, you went back to the shoe store and they said, beat me here, Paul. They said, hey, you, buddy, now your next pair is twice as expensive. You would never go to that shoe store again, but that's exactly how home insurance works, right?
Oh, I wish I could. Do they sell shoe insurance? I would do that.
Well, if it's in your home, it's technically covered. It's technically covered if it's in your closet.
That's why you park your car in a house during a storm.
We'll get to it in a bit, but Ben, I think that metaphor, I guess, is more appropriate than you might even think. The idea of like, dang, well, if that were the case, I guess I'd never wear those shoes, would I?
So home insurance in particular, this is going to strike a chord with a lot of us listening tonight. There is a storm on the way, both metaphorically and literally.
And we'll take a ride on that storm when we get back from a word from our sponsor.
Here are the facts. Riders on the storm. What is home insurance? We described it. It's a subcategory of property insurance. And you guys nailed it because, full disclosure, home ownership can be tough for a lot of people in our generation and younger, especially these days. And some of us are homeowners in the audience tonight, many, and some of our hosts are homeowners. And it's kind of a pain in the butt, but it does make sense, right? Like, a small mistake can be very expensive very quickly.
It can be devastating too, especially if it's not even a mistake, if it's an act of God or nature or the universe, however you want to think about it.
Mm-hmm. Yeah, we've known each other for a while, and you guys have both been homeowners at various times. And when we're just hanging out or chatting before or after a show, or even not work related, we hit on some of the same things. For most people in the U.S., if you are a homeowner, your home is your largest financial asset. That's simply the stats. And repairs are inevitable over time. Your water heater goes out. I'm trying not to point fingers at this one, but I remember, Matt's, okay, can I say it? Matt's water heater went out. It was a whole thing.
It didn't go out. It started leaking, and I didn't know it was leaking, and it leaked water and black nastiness all over my floor and into my crawl space, and I didn't discover it until way too late. And thankfully, I had some pretty good homeowners insurance.
You know, it's funny is I moved in to this place, and almost immediately my sump pump, which is another expensive piece of equipment, just basically exploded and just leaked foul, poop water. Basically, a sump pump, if anyone doesn't know, is a thing that, pumps the stuff from a downstairs bathroom or drain or whatever. Like I've got laundry stuff in the basement to the upstairs where it then goes out, and drains with the rest of the stuff from the house. I tried to make a claim for this and it was denied. So I just paid for it out of pocket, and it kind of established a pattern for me where rather than filing an insurance claim, anytime something goes wrong up to a certain point that's like catastrophic and I couldn't afford it, I just pay for it myself and then take a tax write-off, because you could take a tax write-off for improvements to your house. And it's a lot easier to do that than it is to contend with the insurance companies, because it's a lot of stuff that you have to file, a lot of, boxes you have to tick, and chances are you're going to get denied.
And there's a lot of waiting, and you have to always remember, look, we've got private insurance is a huge employer in the U.S. We're not attacking the individuals. We are describing some problems with a broken system. One of the questions I had in another life when I worked in what you could call insurance was, whom do the adjusters serve? Yeah, it's not you.
No, it's the company.
Right. I mean, water heaters, roof replacements, which inevitably happen over time. Not to mention, like you were describing, Matt, so-called acts of God, natural disasters, bad weather, even non-catastrophic bad weather, like falling trees, flooding, vandalism, 1,000 other things. It's tough for a lot of people to have that much liquidity, that much cash in hand with a snap of their fingers. And that's where insurance comes in.
And, and like at the aforementioned sump pump situation, that's a $2,000 replacement, which is right on the edge of what I could afford to pay out of pocket. And rather than deal with it, contest the denial of the claim, I just went ahead and dealt with it and ate it. And then again, you can you get that back in the form of a tax write-off at the end of the year. So it does kind of balance out, but it really makes me think about how insurance isn't. You can't just feel. They say insurance is selling peace of mind, but I don't buy that. I don't think it gives me any peace of mind at all. Maybe for like a catastrophic thing, like you're talking about, Ben, like a tree falling on your house or an act of God. But even that peace of mind is just somewhere down the line. Maybe you'll get some money back and you'll get some coverage for what you've paid into that system. And I guess we should really quickly just summarize a couple of the different types of insurance that apply to homeowners here.
Yeah. And a big part of this is the window of time. It's something you've been familiar with if you've ever worked freelance. An invoice can take as long as 90 days, but all your other living expenses don't pause for 90 days.
And while you might get reimbursed for some of that, it's not going to happen immediately.
So often there's often people don't have the wherewithal to wait a full year, right, for that advantage. And I love that you're pointing out types of homeowner insurance, or the industry calls it HOI. There's actual cash value policy that factors in depreciation, inflation, all that stuff. So like if you have an old water heater, then you get paid some percentage of that original cost. Then there's a replacement cost policy, just says, hey, if your water heater goes out, then you get a new one that is about the same for this current era or this current year or whatever. You also have to get different types of coverage for your home, right? Like when Hurricane Katrina hit, a lot of people found their insurance claims denied because they didn't explicitly have protection for floods or flooding, which is just a terrible thing to hear. You got to assume that anything in your policy that is not specifically covered may not be covered at all.
Well, and a lot of that stuff's buried in the fine print, and we're not lawyers. We don't always know exactly what there's a certain assumption that these organizations are there to help you out. And we're not here to completely malign the insurance, industry a little bit. But I mean, there is an expectation of like, well, surely they'd tell me if I need that. But no, they surely will not.
Well, and as an individual, add-ons to insurance like flood protection, specific types of fire protection or whatever, that fine print stuff, that can be so cost prohibitive when you're looking at different home insurance policies. When you're already, especially if you're in the process of buying a home, which is a labyrinthine thing that your mind has to navigate through, hopefully with the help of somebody that kind of knows what they're doing. When you get to the home insurance part of that, it reminds me of the funeral game a little bit, where you're already kind of broken down. You're pretty vulnerable in that state already, and you just kind of want to get it done. And I don't know. In my experience, you go for the minimum. Like, okay, I think I'll be okay with this, because it's expensive no matter where you are.
And at that point, you're just trying to get your monthly payment down, because, typically it gets factored into your monthly payment. And most people can't afford to pay that full premium in one fell swoop. So you factor it into escrow or whatever, where it adds a couple $100 a month, and you're already house poor from making a massive down payment. So you want that monthly payment to be as low as possible. Therefore, you're willing to overlook, well, surely I don't need the volcano insurance, right? There's no active volcanoes near my house, right?
Most people listening tonight do not have a Honda Odyssey add-on to their home insurance policy, and that leads to
things
disaster.
Are menaces, though. You probably should.
Yeah, just look at the stats. But then also, I love that you mentioned escrow account. Without getting too in the weeds, for most homeowners, you're going to have a mortgage, and your mortgage and these associated costs, like homeowners insurance, that goes into an escrow account. Your lender pays all the stuff out through that account. Look, there are a lot of people, to Matt's point about having the lowest possible denominator or the bare minimum. There are people who would prefer to have no insurance whatsoever. They're like, I don't have a case on my iPhone. I live, by the code of God playing dice.
Dude. But see, I always thought, Ben, that it was a requirement I thought just, if you own a home, you have to have homeowners insurance. The way if you have a vehicle and you want to drive with a driver's license, have to have auto insurance.
Well, but the only requirement is for the bank. The bank is protecting their investment. You don't have to have it. If you own your house outright, I don't believe you do have to have it. It might vary state to state, but okay.
You do not. There is in the United States, there is no state nor federal. There is neither state nor federal law requiring you to have homeowners insurance. But if you have a mortgage, you don't totally own your home yet. So the banks or the lenders will require you to get that insurance as part of the deal. And that's all, like you guys said, that's all so that the bank can be made whole if your home is destroyed or if something bad happens. All right, folks. Snapping our fingers, wake up. That's it. That's all the background. We're getting to the other stuff. You need to know this. And please do send us your home insurance war stories as well. The price you pay, here's why this is on a conspiracy show. The price you pay for home insurance depends upon where you live. And now, to steal the line from Fox News, more than ever, those prices are changing. They are not going down. Everything shows us that the strangeness, dare we say a bit of conspiracy here, is only going to accelerate. It's only going to get worse and much sooner than we would all perhaps like to think.
So let's put a pin on that. Think about that for a second while we take a quick ad break, and then we'll come back and get right into the weeds, but not too weedy.
Here's where it gets crazy. It's been an open secret in the industry for years. Costly climate catastrophes have driven up the cost of home insurance across the United States, specifically in certain areas. And in some of those areas, they've driven these insurance companies out of the market completely. The industry already has a euphemism for this. These moves are called insurance corrections.
Where have we heard that before, that
Stock
term?
market.
A correction. Yeah.
Stock. I mean, it's the same thing, dude. It's currency. It really is. And there's a market for it, and it's based on conditions, much like the stock market is. And sometimes things are underassessed and or there's speculation that has to do with certain weather events. It's all predictive. It's like betting on futures in the stock market. It's very interesting that same term is used, but I think very appropriate.
Well, lest we forget, Ben already said this in the episode, These are for-profit companies every time, no matter what. They are for-profit. And if they can't make more money with you paying them every month for nothing happening, then they're having to shell out because stuff's actually happening, then there's no business.
Yeah. In June of 2023, 60 million Americans in just California and Florida found themselves scrambling for protection because they would imagine this. You buy a house and your bank says, okay, congratulations, you're in the home ownership class. Welcome to Florida or California. You need to get homeowners insurance until you're done with your mortgage. And you can't find a company that will give you a policy. Or even worse, you've lived in California, you've lived in Florida for a number of years, you still have your mortgage, and you get that annual letter from your insurance company, and they say, hey, we're not going to renew your coverage. You had a good run, go try someone else, but not Farmers, because we're getting out of Dodge.
Like, that's nuts. And there are also stories of people being handed like a 40% increase or even way higher than that. 80, I think I didn't see 80, but I think we're talking where all of a sudden you're going to just renew your homeowner's insurance and now it skyrockets and you realize, oh wait, I actually can't afford that. What do you do?
Yeah, it's not better either. You're not paying more for something better.
Well, no, and I think I maybe have mentioned in the past that I had a bit of a conundrum, and I'll get to what ultimately the resolution of that was a little later, but my homeowner's insurance policy was canceled because I didn't receive or acknowledge some notification that probably came in the U.S. mail. And again, I mean, it's my own fault, and consider it like chalk it up to inexperience as a, relatively noob homeowner, but you have to interact with them because the terms can change because if you don't acknowledge the terms have changed, then they cancel it. So, I mean, maybe I'm misunderstanding the way that works, but that's my understanding is that because I didn't reach out with this renewal period, they just canceled it, unilaterally. And then my mortgage company took it upon themselves because it's a term of my mortgage to have homeowners insurance. And they signed me up for a policy of their choosing that was a good $400 extra a month. And I just totally ate that for way too long because I was just so frustrated with the whole process.
Yeah, and that's unfortunately a very common story for a lot of people, even before these climate crises started driving people literally out of house and home. And in defense of these insurance companies, getting mad at them for being for profit is kind of like getting mad at dogs for barking and pooping. It's part of what they do. It's arguably why they're around.
It's how the system works. It's why they will cover when your entire roof blows off during a tornado, because there are enough other people also paying for that tornado insurance, and it's expensive.
Yeah, and it's all a numbers game. Some of the most I think some of the most high up intellectual mathematicians are underwriters. They're the ones who figure out how much your premium is. A premium is just sort of the dumb word the industry uses for those payments you make monthly or annually or bi-monthly or whatever. They don't want to turn people away if they can help it because that's their business model. They need customers. So they don't want to say no, but sometimes for their own survival as a company, they do have to say no. The numbers, it all goes back to the numbers. The numbers are inarguable. Maybe we talk a little bit about just how crazy things have gotten in California and Florida.
Correct. In California, there were 8 disaster events from 2020 to 2024 that caused between 20 billion with a B and 50 billion in damages combined. Think wildfires, y'all. Think of total loss of property in Malibu, for example. A good friend of ours, I'll just keep them private, but a very close friend and colleague of ours had a family member who entirely lost their home in Malibu that they'd lived in, for, I want to say a generation, if not longer. And that is a common story. Yeah, you're running a little bit of a risk living in California, in a place where wildfires thrive like that, and there are rock slides and things like that, and erosion, certainly. So that makes sense that it would maybe cost a little more because the damages and potential events are much, the likelihood is a little higher there. But still, in Florida, on the other hand, 30 severe storms or hurricanes from 2020 to 2024 caused between $100 billion and $200 billion in damage. One of these, of course, was Hurricane Ian, the third most just catastrophic, costly storm in United States history so far. And again, a lot of this has to do with the fact that these things are becoming more and more common because of climate change.
And this is coming from our good friends at NOAA. So this is a nonpartisan, non-political source. This is just a bunch of boffins and eggheads.
Mm-hmm. And that's the National Oceanic and Atmospheric Administration. And this is just one extra thing, guys. I want to throw Texas in here too, because I found some interesting stuff on them. And it, as we were going through the research, I kept thinking back to 2021. Do you guys remember when there was a big storm in 2021 and power was out for a long, long time? I think it was Uri. It was like a winter storm, Uri. And the Texas grid failed, basically. And there was it was only, I think it was $10 billion worth in losses, like insurance losses for that one storm across all of Texas. And if you look at the numbers again from NOAA with Texas, there are an average of 4 natural disasters in that state that occur every year. But between 2019 and 2023, they suffered an average of 11 over $1 billion events every year. Imagine as a state shelling out $11 billion a year knowingly because of natural disasters. And then as an insurance company, you know that you've got all of these people that you now have to serve to repair all of these homes. I don't know, that it just seems unsustainable to me.
It reminds me how recently we encountered the hottest day ever recorded on Earth. It was a Sunday in July, and it was only the hottest day ever for about 24 hours because the next day was hotter. So the two hottest days on the planet, number 1 and number 2, happened consecutively this year, which shows us the pattern is escalating. It's untenable, as many people in California, Texas, and Florida can agree, even just looking at their home insurance bills. You know what I mean? Like, no matter what your political ideology is, the money moves, and you can tell what the mathematicians are thinking by looking at the bill.
Well, yeah, and all they have to do is pay a little bit of attention and go, oh, we need to raise our rates by a lot. And when I say a lot, I mean a lot.
Mm-hmm. Yeah. 2023, the average homeowner insurance premium in Florida is $6,000 a year, not $1,000. That would be funny.
Robin Thicke, $1,000.
$1,000. I mean, but that's way above average, right? In the U.S. I mean, it's definitely higher than Georgia, correct?
Yeah. Think about that being the average. That means some people are paying way more than that.
Right. Yeah. And then just this year, 2024, the average went up $2,770. The average home insurance in Florida now is $8,770 a year. And it'll probably be higher in 2025.
Yeah, it'll have to be until it just goes away in 2028. I'm just joking. Florida, I mean, not homeowners insurance. Okay.
I mean, it's
it just says bye.
Everybody remembers that Tool song about "See You Down in Arizona Bay." I mean, Florida and California are two of these locations that they're beautiful and they are lovely places to live, but there are some somewhat apocalyptic future, kind of doom-saying things associated with them.
100%. And, as more and more private companies exit these areas, more and more people enter state-run alternatives. Kind of like how if you can't afford private medical insurance, you may live in a part of the country that allows you to participate in a government plan. And California has something called the Fair Plan Association. Florida has something called the Citizens Property Insurance Corporation. And as of just last year, that Florida state-run company alone held the homeowner policies for 1 out of 8 of every household in Florida.
That's a lot more than I would have expected, but it does make sense. Man, watching the news, watching the weather recently, especially when you see the kind of storm that we just had, and I can't tell you the name of it because I didn't keep up that well with it, but the storm that formed in the Atlantic pretty swiftly became a hurricane and then swept across and then went all the way up the eastern seaboard of the U.S., and people from Florida all the way up to upstate New York got flooding, like terrible flooding. When that kind of thing is feeling more and more like a regular occurrence, it's not good. It's not good for anybody who's going to have to pay homeowners insurance.
Agreed. Yeah. And it's not good for the companies either. I mean, it's such a headline. It's such red meat for a headline, right? To divide people or to alarm people to say climate change is pushing home insurance. But there are other factors at play. The story is not as simple as headlines might imply. So one of the big things that people hadn't thought about, I don't know if we all thought about this as well before we started researching, is the role the pandemic played, but maybe not in the way we think. There was a great interview with a guy named David Blades, which first off is a really cool name.
Like a magician or something. Well, I mean, obviously there's David Blaine.
He's a bouncer.
I picture him talking. Yeah, and he's like specializes in knives and butterfly knives and switchblades. So he's talking
Punch
to NBC.
knives.
Yeah, he's talking to NBC, and he's just like, he's got his hand on a desk and he's popping the knife in between his spread out fingers or something. But he said that we need to look at U.S. construction cost, because before the pandemic, from 2016 to 2020, those costs increased between like 1% and 3%, which seemed very reasonable, moderate, what you could expect. But let's give a quote directly from David Blades.
Okay, this is a direct quote, and I'm just going to put this here because I think I accidentally made us skip over his actual credits. He's the Associate Director for Industry Research and Analytics at AM Best, which is a global credit agency and data group. Okay, so he said, with this increase you're talking about, a very moderate amount of inflation, he says, yet, during and after the pandemic, supply chains were disrupted. Real estate prices skyrocketed and interest rates surged. As a result, construction costs soared 13.4% in 2021 and 9.3% the year after. So combined, that's 22.7%, I think, if I'm doing my math correctly. I may not be. But that amount of construction cost increase that makes so much sense, Ben. Why would construction costs increase homeowners insurance?
Oh, yeah, that's our Dennis Reynolds moment. That's the thing where we're like, we haven't thought about that. When construction costs rise, so does the cost of literally any repair. So home prices surge in the beginning, but then anytime, the water heater breaks, anytime you've got to replace the roof, anytime a Honda Odyssey hits the side of your house, it's going to cost at least 20-something% more. And this means that the insurance companies have to start jacking up their rates to a certain threshold, but they don't have infinite tolerance. At a certain point, they have to ask themselves, well, it's not just a matter of whether or not we can turn a profit here, but can we literally afford to do business at all in these areas where we know hurricanes are not a possibility, but a certitude, a certainty?
Too. That is indeed nuts. And I'm just going to take it really quickly back to my water heater situation, because that was right in pandemic times. And that's when construction costs were going way up because the prices of wood were going way up. And they had to replace quite a bit of wood in the floor of my house. And it cost them way more than they expected, the insurance company, to even do the job. So I ended up having to, I don't even know how I navigated it, but I had to pay extra money, basically. at that time because of my deductible or whatever it was I had, plus some other thing. And I can't even remember, but it was because of those construction costs.
And the interesting thing too is, like, I think I sent you guys a link to this YouTube video on building integrity, which is a YouTube channel, and the guy that I think runs it, he's like a consultant in cases of insurance fraud, but in terms of fraud perpetrated by insurance companies. And one thing this dude pointed out that I definitely verified is relatively common is this idea that, since these are for-profit organizations, their money that they receive that are profits, they don't necessarily even have to put those aside in the hopes that, that like this is held for you, right? Where it's not like the same as escrow, where that's money that you pay through your mortgage company, they hold on to for you and that then is used. So the money that you pay your insurance company, they're not tucking that away. And there could come a time where maybe so many claims are coming through that the insurance company isn't profitable that year, but they only apparently have to balance the books in years where they don't make their bottom line. So it's just a really interesting balancing act because of this whole for-profit nature of it. And the fact of the matter is, it really just isn't designed to protect you. And there were all these video clips I was watching of insurance adjusters coming out and hanging out with a roofer who's showing them that this roof needs to be replaced by ripping out these shingles. So you can see, look, the nail holes here is all worn. And the insurance adjuster's like, no, you're being too aggressive with that. That's not how you do that. You don't rip the nail out like that. You're not even trying, guy. He's basically telling this professional roofer that he is not approaching this with the desire to repair. He is basically saying, you already have your mind made up. But what the reality is that the insurance adjuster already has his mind made up as to the fact that we will not replace this roof, even if it's within the time frame of when a roof should be replaced, which is, I think, 25 years or something like that. And it's just fascinating because the point that the guy on the YouTube channel made is that you could argue that, well, they knew how old the roof was when they insured the house. And if they weren't going to replace it due to the storm damage, then that was what this was relating to, then they shouldn't have insured it in the first place. But the fact is, when people insure your home, they ask very vague questions. They want that plausible deniability, right? They don't want to know everything that's wrong with the house. That way, when something really does go wrong, they can say, well, that wasn't really covered under the terms of our agreement.
Could you describe your foundation in terms of vibes? Yeah.
It really is that way. More or less, because they ask you these. I literally applied for a new policy today because of that issue I was talking about. I finally dealt with it, and they're like, "How old is your roof?" I'm like, "Ooh, I could look it up." Like, "Oh no, just give us a ballpark." I'm like, "Really? A ballpark? That'll work for you?" That's a little sus, isn't it? Because the point is, they'd prefer a ballpark, and they're doing all this over the phone. They haven't come to my house. You'd think that they would inspect the home before agreeing to insure it, but that is a feature for them, not a bug. The less they know, the better, honestly.
A lot of ballparks don't even have roofs, to be honest with you.
A lot of ballparks burn down.
Can you imagine the insurance on owning a ballpark?
That's what I'm saying.
That's where you start to just think seriously about buying the insurance company.
Yeah.
But this is, and another great example, I think, or a great comparison to Noel's point, a terrifying one, is anybody who works in the medical industry, you've seen something similar when doctors or nurses say this person needs this treatment, and the insurance company comes back and says,
do they? That sounds like a luxury. They don't really need that second lung, do they?
But they can pay for it. They could totally pay for that if they want to.
Yeah. They did describe the vibes of their kidney when they signed up. So it's really on them. I think this goes to another issue, and this is a factor that is also a prime mover of the home insurance crisis, which we are entering. It's the obfuscation. Because the scope of the problem was a big open secret in the industry, but for a long time, it was hard for the public to get information about this, to get the full lay of the land, because insurance companies were purposely hiding a lot of it for a very long time. It was a Herculean effort to get a look at the cost of insurance, the same insurance policies in different parts of the United States, because the private insurance companies didn't disclose that. The same way like a lot of streaming places won't give you their exact numbers. That's their secret sauce, right? And you don't want, Johnny Blue Jeans in Enid, Oklahoma or wherever to learn that somebody else across the river somewhere is paying much less for the same product.
Not to mention that some of these big players in the insurance space, like the State Farms of the world or whatever, they pretty much fall into that too big to fail category. So if they ever did have a bum year, or maybe they had to pay out too much, they're going to get a bailout. And then it's like rinse and repeat, kind of,
So how do we even know what we know about how much insurance premiums cost on average per state, per region, per, even town? Well, there wasn't some group putting all those numbers together, kind of like how, remember when we looked into murders and homicides and deaths in national parks, and we were trying to find, and the missing, like the number of people? Nobody's out there collecting that data and putting it in a spreadsheet and publishing it online somewhere or in an article or journal. Nobody was doing that for homeowners insurance either until a dude named Benjamin Keys. It's a Ben. It's one of the good ones. And Benjamin Keys comes along. He was a professor of real estate at the University of Pennsylvania's Wharton School. And another person named Philip Moulder. Oh my God, a Moulder too?
Right.
That's awesome.
It's too good to be true, y'all.
Moulder and Keys got together. Philip Moulder is a professor at the University of Wisconsin School of Business. They got together and said, hey, let's figure this stuff out. And we're going to tell you what they figured out right after a word from our sponsor.
And we've returned. So we've already, I think, established just objectively, here are the facts level. There are dangerous things on the horizon climate-wise, both metaphorically and literally. And we learned about the study by Keys and Moulder that you can read in full online, thanks to a journalist named Christopher Flavel writing for the New York Times. And they were saying, wait, why are home insurance rates distorted across this grand country of ours? And they said, all right, climate change drives it, right? It's the heat, the wildfires you were talking about, Noel, the flooding we're mentioning, Matt, the tornadoes, of course, because part of this country is called Tornado Alley. And in a previous conversation, we established how Tornado Alley is growing at a breakneck pace, again, literally. And this is a well-established trend, but it's not the whole story, because it doesn't explain why a small town like Enid, Oklahoma would be one of the most expensive places in the country to have home insurance relative to the actual value of your house. This is where we see what Keys and Moulder do. They teamed up with a group called Core Logic. Core Logic is another hardcore, and I say this with great respect, nerd outfit. They're math wizards. They're a property information and analytics group, and they get a lot of info from mortgage servicers. So if you own a home, you pay, into your escrow account, and groups like Core Logic get the information about what you're paying. And they got the data for about 12.4 million, what we call owner-occupied households. So not people flipping Airbnbs, none of the BlackRock stuff, people who live in the homes that they own. And then Keys and Moulder did something really clever. They went into these escrow accounts. They did some fancy financial forensics, and they managed to estimate what each household paid for property insurance. And then they found that, yes, there's a relationship between climate risk and what companies charge, but it's not all the same. It doesn't explain the discrepancy. Higher premiums are charged in every state where regulators don't ask as many questions from the company.
Oh.
In other words, and O is right. In other words, states with rubber stamp regulators serve the customers up to these private industries on a platter. And I would posit that it's not going to be tough for us to find some revolving door situations where, you might work as a regulator and then later you get a plum job for
Private
some of the
sector.
private. Yeah. Yeah.
Dude, that's exactly what was found in Texas. Look, it's kind of a known thing. Texas is a state where regulations are frowned upon a little bit in general, not fully, but, let's say they're minimized on purpose. In Texas, unlike especially in California, when an insurance company wants to raise a rate, they kind of get to just do that. And then they get to ask for forgiveness later rather than asking permission up front. If in California, though, if you want to raise rates as an Allstate or whatever, company you are, State Farm, if you want to raise rates, you have to go to California to a government body and say, hey, here for X, Y, and Z, we need to raise our home insurance premiums. On average or whatever.
So you'd have to make your case with like the increased prevalence of natural disasters in certain areas and tie it to specific events and say this is why we need to do this?
Yes, but in Texas, you've got something called the Department of Insurance that takes a look at stuff. It approves the rates, but it takes a look at about half of the rate increases that happen every year from homeowners insurance companies.
So that's the rubber stamping we were talking about, right?
Yes.
Mm-hmm. Yeah. I don't want to, again, as we said, I don't want to malign people unfairly, but it's giving big golf game conversation energy out there in Texas.
Yes.
You know what I mean?
Yes. And I misspoke. They don't look at half of them. They look at all of them, presumably, but they approve roughly half of them. Just like, yeah, definitely you guys can raise rates.
And is there an appeal process from the consumer's perspective? Like I know, for example, you can dispute property tax increases. There is a whole system in place for that, at least here in Georgia. But what about with the insurance rates?
Yes. In Texas, there is one thing. You guys, in 1991, the Texas state legislature made a thing called Public Insurance Council, or the Public Insurance Council, and they represent the interests of consumers. And they attempt to maintain a quote, at least according to this article written by Michael Hardy in Texas Monthly, they attempt to create a balanced marketplace.
You're saying it in a way where I don't know if you believe that that's what actually happened.
I heard italics. I heard italics.
Michael put it in quotations in his article.
That was your italics voice too, Matt, to be fair. No, it does seem, sure, it's a good cover story. It's good for optics to say, no, we have this subcommittee or whatever that's looking out for the best interest of the consumer. But it would seem to me that they do a bit of rubber stamping themselves, or at least I haven't heard of much coming out of this short of a couple of like publicity grabs, maybe. I don't know. Tell me what you guys think.
Well, there are also valid points, which I guess we're ethically required to mention. And those valid points would be, from their perspective, there would be arguments like, hey, people do need home insurance, right? So let's work with these entities. And then another one would probably be the kind of iron hand and velvet glove argument that happens so often, which is we bring a lot of business to this state, right? Or we as an industry employ a lot of people, which can be true, but can also be an implicit threat.
Yep. And there's a third perspective. Get on YouTube and learn carpentry, dude. Except I would never follow that. I wish I could repair stuff.
Yeah, you can.
Oh, it's okay.
You can learn
but then
anything
who would
on
need
YouTube.
homeowners?
Right. I don't know. I love that you're bringing up this example because the effects of these state by state regulatory differences, right? You're in a California and and we're not saying California is perfect by any means, but you're in a state where regulation has teeth and you are required to come with some facts, to come with some quantitative data that shows the necessity of a thing, right? Because they don't want you to leave either. As an insurance company, they don't want those companies to leave. But then if you go to places with much more lax or compromised regulation, then you see that there is a huge discrepancy. You can go into this New York Times article, you can see the discrepancy in these pretty clever infographics wherein you can plug in, like you can look at your own zip code or your own county, and you'll see how weird this stuff goes. That is the reason the average premium has jumped 33% in just 3 years, much higher than the rate of inflation from 2020 2023. The system is unfair. You could live in this place with the same amount of risk, regions with the same amount of weather, the same chance for, a disastrous event, and you might pay a wildly different rate because you might be in a place where the regulators sometimes do their job or sometimes don't.
Dang.
We've got a little lag because I'm recording on the road here, but just to be clear, that pause was purposeful. I was going for like a dramatic thing.
A pregnant pause, a PP.
Yeah, PP.
And Ben, you found another quote from that same New York Times article that is unfortunate.
Yeah, it's a little long, but I think it's worth hearing. Should we round robin it?
Absolutely. Across the more than 9,000 zip codes for which data was available, the typical American household last year paid about $500 in home insurance premiums for every $100,000 of home value, or 0.5%, the professors found.
But in California, which suffered through more than 7,000 wildfires last year, good Lord, the typical homeowner in many zip codes paid premiums as low as 0.05% of home value.
By contrast, the quote concludes, in parts of Alabama, Oklahoma, Louisiana, and Texas, the average homeowner faced home insurance premiums greater than 2% of the value of local homes. Now, 0.5, 0.05, 2%, they may sound like small numbers until we realize we're talking about percentages of hundreds and hundreds of thousands of dollars.
Well, yeah, and think about the vast differences in average home value there that are represented in a ton of homes in Louisiana versus a ton of homes in California. I don't know. I don't want to disparage any homes in Louisiana. It's just you imagine the amount of wealth and money that goes out into many parts of California, and the types of homes that are built, and the price increases in home value that have been happening out there.
Well, and I know we're largely kind of centering this conversation around the climate change angle, but I did just want to just give a tiny quick conclusion to my kind of home insurance odyssey. After looking at this research and in preparing for this podcast today, this morning, I kind of was like lit a little bit of a fire under me to take care of this and stop overpaying for my homeowner's insurance policy that my mortgage just took it upon themselves to sign me up for. And I received quotes from 4 different companies, including the company that I get my car insurance through, and they were just all over the place. And there's a formulaic way that they ask you these questions, and it's like literally dictated, I'm sure, by legalese and regulations. And ultimately, the thing they tell you up front is this is the cost that we assess it would cost to rebuild your home. And that number, you guys, from 4 different organizations, completely different number. And the kind of boilerplate coverages they thought that I needed, also completely different. And the deductibles, also completely different. And it was really eye-opening for me how, like, if I'm a total, noob with this stuff, and I definitely am not armed, a little more so now, but not to the degree that maybe someone who does this stuff for a living, with the right questions. Honestly, it's so mandatory that I just don't know how much that would even help. And I was just, to Matt's point earlier in the episode, I was just satisfied with getting my payment down by a couple $100 a month and just to move on with it, because they just browbeat you with this stuff, and you're almost left like in this submissive state where you're like, please just make it go away. Please just make it go away. And that's how I'm honestly getting a little choked up talking about it in a weird way, because it is like emotional abuse in a way, because you're like, am I complying? Am I complying? As long as I'm complying, And I just was left with, and I ultimately went with State Farm. And you know why I went with them? Because it was cheaper. And the guy was kind of nice and didn't sound like a dead-eyed robot.
Yeah.
And I got a better car insurance rate, too, so I bundled. But even that stuff we haven't talked about. They'll be like, we'll give you 30% off on your homeowners if you bundle your car. What up with that, y'all?
Whenever somebody gives you a margin that large off, they're also giving you a sneak into how big their profit margin is to begin with. And you should always, this is very, I don't want to come off, be a stereotype of myself, but this is also part of the reason why you should always check your car insurance. You should check every bill you have to pay regularly, because if you don't, it will just continue to kind of hitch its pants up as a bigger and bigger slice of your budget, because people are counting on you to not care. They're counting on you to not dive into that boring stuff. It's boring on purpose. You know what I mean? And again, it's the system. It's not the individuals. Look, we know here in the US alone, 39 million different properties are vulnerable to one or more types of disasters. We know that about 10.7 million Americans right now live in a county where 100% of the homes are vulnerable to that insurance correction. And those places tend to be less wealthy. They're less equipped to fight for their rights, to do something we're talking about in our group text, to get the lawyers, to be able to take something to court when things are getting shisty. I mean, it's going to expand, just like Tornado Alley, and also a bit of empathy, as weird as it may sound, for those insurance companies. If they can't make a profit, they can't exist either. So from their perspective, this is not about necessarily screwing people over. It's an existential threat. You know what I mean? You can't sell flood insurance if you know for sure the entire place is going to flood several times a year.
No. That's why, what is it? The 500-year floodplain or whatever is a thing? Because there's some risk there, but it's 500 years. Come on.
Right. By which time I'll be retired, out in Sioux Falls. I don't know why I'm referencing Sioux Falls. I think it's a Please Don't Destroy sketch. Do you guys remember that?
Oh, yeah. I love those guys. I really quickly, guys, I found this. Apparently, Vermont has a super low homeowners insurance average. It was like $799 average or something in Vermont. And there are lovely homes out there. Let's go to Vermont.
Ben and Jerry's country.
Why don't we go
Fish
to Vermont?
country.
Yeah.
I don't even know what's out there.
Leaves. Noel named the
A lot
other
of
two
grass
things.
to touch. It's probably be good for our mental health, y'all. I don't even think they got the internet in Vermont, y'all. Everyone's so mentally healthy and spry out there and just noodling on a banjo on a front porch with a weed in their mouth. Or some
Bernie
weed.
Sanders is there still, I think.
He's kicking it on the regular. Yeah.
Oh, hey, quick breaking news. I know we were talking about Vermont, but just talking about climate change with talking about disasters. I'm reading right here on ABC News that as we were recording, a 4.4 magnitude earthquake hit Los Angeles.
Yeah, California happened. Yeah. Actually, one of our, I learned about one of our old colleagues or former colleagues reported it. Apparently very, very scary stuff. Also, the ring of fire is awakening is the problem. The tectonic, it's a cool name for the tectonic plate sensitivity around the Pacific Rim. Typhoons, earthquakes. It's all happening. Stay safe out there, folks.
Ugh.
Yeah, stay safe. And also let us know this larger question. I'm glad you got the breaking news for us there, Matt, because this does bring to mind a larger question. Disasters are becoming more frequent, less predictable, expanding to touch places previously considered safe while also growing in severity. So where can people go for safety? What will the world look like beyond insurance, right? Beyond the financial stuff? Existentially, what is this planet going to look like, not just next year, but within the next decade? Let us know, and also tell us your homeowner war stories. If you are a contractor, we got a lot of contractors in the audience tonight. Tell us the weirdest conversations you've had with an adjuster. We love to hear from you. We try to be easy to find online.
That's right. You can find us at the handle Conspiracy Stuff, where we exist on Facebook, where we have our Facebook group. Here's where it gets crazy. On YouTube, where we have video content coming at you on the regular, and on XFKA Twitter. On Instagram and TikTok, we are Conspiracy Stuff Show.
We have a phone number. It is 1-833-STDWYTK. When you call in, you've got 3 minutes to leave a voicemail. Please do give yourself a cool nickname and let us know if we can use that name and your message on one of our listener mail episodes or anywhere else. And if you've got more to say than can fit in that voicemail, why not instead send us a good old-fashioned email? We are
the entities that read every piece of correspondence we receive. Be aware, but unafraid. Sometimes the void writes back. Quick note here, folks, the audio quality may be a little bit different for a few weeks. Some of us are nomadic, but we are going to keep the lights on here, and to do that, we need your help. So give us a shout in the dark. Conspiracy@iHeartRadio.com.
Stuff They Don't Want You to Know is a production of iHeartRadio. For more podcasts from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you listen to your favorite shows.